We'll explore SEBI's evolving regulatory architecture around ESG disclosures, green bonds, climate risk integration, as sustainable investing becomes mainstream. With India's capital markets opening up to green finance in unprecedented ways, how can we ensure credibility, consistency, and investor protection in this fast evolving space? Let us please welcome our next guest on board, Mr. Pramod Rao, ED of SEBI, to please join us on stage. Also walking with him is Siddharth Zarabi, Group Editor, Business Today, who will be moderating this session. Over to you, Siddharth.
Thank you very much, Sakshi. We have the regulator here with us, and whenever you have a regulator, there are multiple questions that you can ask, and there are many questions that you cannot ask. But I want you to quickly set the context for our entire audience here and our viewers regarding what is the big picture as far as SEBI is concerned in terms of the agenda that you want to set. You know, the big picture as far as SEBI's agenda for corporate India when it comes to the ESG space is concerned. What's the big picture here, Mr. Rao?
Thank you. I think I'll put it in maybe 5 buckets. So one, disclosure, and that's really driven by our BRSR core. The second, I would say, is trying to drive investments towards companies that actually undertake BRSR core. So we have actually linked our mutual fund ESG schemes to invest into companies that publish BRSR core as well. I think the third is what I would call debt capital, which can go towards green projects. So we have a green bond framework. Just yesterday on the World Environment Day, we issued also a circular, a framework for ESG debt securities. So there is both those sets which we have enabled. I think the fourth component would be a trust and verify segment, where we look to both ESG rating providers. You have, for instance, CareEdge, which is here. I think that's again licensed, registered ESG with us. And I think the final thing is the social stock exchange, where we are trying to get philanthropy into the capital markets, but really to support both non-profits and social enterprises.
I want to take the BRSR framework right on top in terms of the response and your own assessment. Has corporate India risen to the challenge, or is there still some work left to be done?
I think it has risen to the challenge, and in fact, I would put it as surpassed it as well. Our requirement is actually only that the top 1,000 companies publish BRSR. We are cruising at about 1,200 plus who are doing so. So to my mind, there is even this voluntary nature which is sort of come in. Some commentators have told me that it could be that they were publishing in the past and now don't want to stop. So at some level, I think that's an encouraging sign for us.
But do you foresee that this framework, as far as the regulator is concerned, can get extended beyond 1,000 and also therefore to some extent maybe smaller sized companies eventually?
So I think one, it's voluntary for those who are beyond the 1,000, and we would prefer to stay on that course. But I think the linkage to value chain, the smaller enterprises that are linked to the large companies, and today the top 50, for instance, are required to publish the BRSR core. There, I think there is both opportunity and ability for the small enterprises to join in. Right now, we have scaled back. Earlier, it was supposed to be 75% of the value chain. We've actually, responding to industry, said that we will look at it at a lesser magnitude. But I think, it's a journey which has begun. So over a period of time, I'm sure it will encompass the entire value chain.
Beyond the regulator's purview, really, but do you think unlisted large corporations also, and there are many of them, should also come under a framework, whoever makes that policy?
So it does come under the Ministry of Corporate Affairs.
Yep.
I think they've actually been encouraging and creating what I call our voluntary standards. Those apply to the unlisted public companies too. But you're right. I think if they have a sense of responsibility, they should really, measure up to either our standards or the MCA standards. for sure.
Absolutely, and if they do it voluntarily, as you were saying that there are companies beyond the 1,000 who do it voluntarily, it makes sense and perhaps eminent business sense from a valuation perspective as well. I personally discovered during this exercise and where CARE ESG came up with multiple data parameters for our jury to consider, and this is about standardization of the data reporting, and therefore to ensure that it is reliable and accessible. Do you think there are some tweaks that are required on that space?
So I would say yes and no. I think one, we had a industry standard forum which in December actually gave us the various data points that needed to be there. So I think there was both the industry coalition and the regulatory imperative to sort of put it together. Do we remain open to further simplification? I think yes. The answer would be yes. The key is that I think it should be uniform and comparable, because when you have 1,000+ companies reporting, whether for rating analysts, whether for the market, I think if there is lack of comparability, then that is a challenge. So I think indeed we are happy to work towards that as well.
One quick point is, if you were to sort of compare India's corporate ESG framework, both in terms of regulation and compliance, how does it stack up globally, especially with the advanced economies?
I would actually say, I think maybe a qualified answer. So one, when we created it, we actually preceded many of the global standards. If I trace back to 2012, when the Ministry of Corporate Affairs published the BRR, I don't think the world was thinking of these reporting standards. When we came out with BRSR, indeed the working group which looked at it, compared it and looked at international benchmarks which were then available, GRI, TCFD and so on. So I think those learnings have got embedded into our reporting structure. But I don't think we are consciously trying to say that we need to have one particular global benchmark that we need to satisfy. I think we end up looking at it as that India has its own needs and own sort of evolution on this. So we'd rather that it evolves at the pace that we require and indeed suits our nationally determined commitments. So.
Oh, no, that's a very, very important point, because while corporate India and most parts of corporate India in terms of their standards, processes, adoption of technologies and many other things are, globally benchmarked corporations. The company may just be located in India but is globally competitive. But when we look at the broader aspect of climate change, we realize that a large part of India still needs support. So that question was aimed from that point of view. As we went through this exercise, we had several companies who are not amongst the winners, who you will see later on today, reach out to us and say, hey, can we participate, or you didn't reach out to us, and that's why the results are completely driven by data and there is zero discretion applied by anybody. But I want to ask you, do you see a concern around ESG greenwashing?
So I think greenwashing is a risk and a reality. I think, in fact, yesterday, World Environment Day, I think I saw a small news report which complimented us on the launch of, as I said, ESG debt securities. I flipped the page and there was an entire story on greenwashing. So indeed, I think it's a reality. The way I would frame it is that we need to be conscious that, yes, these can creep in. There might be inadvertent creeps in terms of companies just claiming and yet not realizing that it is untrue. Those that are consciously misleading. And I think we will make some of those steps and actions towards those that do it consciously. I would take the example of the BRSR and the BRSR core itself. So one of the data points which people have to put out is that, do you have water consumption? And I would tell you that there's no company in the top 1,000 which would not have water consumption, right? Yet there are corporates which actually reported zero. Now I'm hoping it was inadvertent and not conscious misleading. But this is the degree where something as innocuous as that can lead to maybe a risk of problems.
Absolutely. And since you spoke about water, I'm just reminded of one of the key requirements that the semiconductor industry has. I don't know how many of you here and those who are watching this know about it, that one of the key ingredients in the semiconductor manufacturing space is massive amounts of water that are required. So a good point there. As an investor, the ESG label that you see around a company, how should an average investor approach this, and in their mind, should they ascribe any sort of valuation premium to good ESG compliance by companies?
I think it will be a market phenomenon. So to my mind, we haven't tried to say that there is a value or not. I think it is for the data to actually speak, like you said earlier. To my mind, equally, some of these labels have attracted the Ministry of Consumer Affairs. I think the previous panel also mentioned that, there are now greenwashing sort of labels if they are putting on their products and so on. I think the way I would put it is that if there is financial returns to be made, people will be attracted to things. Do we have those kind of data linkages yet? I think that is where the industry really needs to spend some time.
You spoke about the bond bit yesterday, but broadly speaking, in terms of sustainable finance and incentives, what more can be expected and what is required? If you can give a sense to everyone here as to what is the regulators thinking as far as this is concerned?
So, like I said, we have two frameworks now, both the green bond, which has been in vogue for about 10 years with a refresh we did a few years back, and yesterday's ESG debt securities framework. I think what can be done more is really creating pools of capital in India which sort of invest in these bonds. I think these pools of capital exist overseas. We have seen a lot of dollar issuances, foreign currency denominated issuances of such bonds, but not locally. I think it then becomes incumbent to look at large pools of capital, insurance companies, pension funds, EPFO. If we have to drive towards a green, sustainable economy, I think they need to be investors in these securities too. Of course, they are all mandate-led. There is an investment pattern prescribed. So perhaps it would be the right time for the IRDAI or for PFRDA or the Ministry of Labour to sort of start thinking that should they tweak that investment pattern to recognize some of these instruments.
And if you say recognize, should there also be derecognition down the line? We see many global funds adopting that approach, but do you think that for a country like India is also something to consider?
So again, like I said, we are at that starting gate. We don't today have those dedicated pools of capital. So should derecognition happen, I think we are capital starved for regular stuff as well. So I wouldn't go that far. But yeah, at least something to push and nudge.
We'll have the Environment Minister of India later on. But in that context, and I'm coming back to what you had told us earlier, you said that we have to strike our own path. But within that, is there some area which you feel is unaddressed and needs some work? Whether, I'm not asking you about SEBI's agenda, but broadly speaking as an expert in this space.
I think, to my mind, a lot of more cohesion can help. I think we are attempting that. Between regulators, we are trying to come together and sort of say that can we approach things in a common way. For instance, RBI has green deposit norms. The Government of India has done green sovereign green bonds. We have our own green bond framework. Can there be some level of convergence? I think yes. I think we can work towards that. I think the second aspect would really be around the reporting portals. What we lack today, I think the top 50, top 100 are able to, sort of do reporting not just for us, but several international reporting standards as well. How do we enable that for a larger piece of companies, including small and medium, I think would be another challenge worth tackling.
Let me also turn to one other aspect, and this is primarily to do with capacity. As we put together this entire exercise, and it's taken us some amount of effort and time, I felt that there is an issue around overall capacity in the system. Two parts to the question. Do you agree with that? And if so, what needs to be done by all other players, stakeholders, to sort of ensure that our capacities go up as overall as an economy?
So yes, I think we do have a capacity lacking, and I think that is both leading to appreciation of the challenges, trying to document what we actually need to get done, and so on. And some of it is expertise which can marry a lot of the new age technologies to what we need in the traditional sectors too. What can we do? I think even at SEBI, we are thinking, can our education initiative, NISM, launch courses which sort of help people understand some of these challenges. I think that can be our bit for capacity building, but I think it can overall be led by the corporates, which are going to be the real users and absorbers of such talent which needs to come in. So whether it is B schools, whether it's technical schools, I think there needs to be some sort of drive towards saying sustainability has to be part of that curriculum, part of the training.
I felt that, I almost felt that you were going to talk about an MBA in ESG because there are specialized MBAs and that's a trend. One final point, if you have to sit down again for a similar conversation, if not next year, but in 2027, what would you be expecting corporate India to have accomplished on this front by then?
I think we should have had the top 1,000 companies doing the BRSR core. To my mind, that is verified, that is assured or assessed numbers. And I think verifiability gives a different sense of confidence to investors and to the markets. I think it removes that risk of greenwashing as well because it's not self-declared items. I think the second would be if value chain that this entire 1,000 listed companies rely on, if they are integrated as well into not just reporting, but actually taking sustainability practices to the next level. I think that would be remarkable. And I think at some level, not just the most sustainable, but those within that value chain who have really, moved the needle, something like that would be really interesting to watch. I think the last piece for me is that indeed the green bonds, the ESG bonds, so on, being much more available domestically for investors to participate in, for retail to recognize that they can contribute as much to this journey would be really nice.
Absolutely, and given the kind of interest that we see in new investment products, many of them are very risky, but clearly a ESG bond, a green bond would be far more stable. Mr. Rao, there's so much more to discuss, but I'm going to leave it here and thank you for your time and your insights here. A round of applause for Mr. Rao here. Thank you very much.